Just a word on the overall numbers. The consolidated numbers look fine on the face of it, but if I move away Biocon Biologics and look at Syngene, etc., I think expectations were penciled in at higher from the street.
Well, I think we have delivered in line with the expectations, at least that we had set. I really can't comment on what the street was expecting. I think both our businesses, generics and biosimilars, delivered a very, very strong 24-25% growth, and or the CRDMO business delivered 2% growth over last year, which was in line with the plan and in line with the expectations that we had set. So on a consolidated basis, a very solid 20% growth, and a sequential basis, again, a very solid 9% growth. And I think, this growth, of course, there have been many drivers which contributed to that this growth, and we expect this growth momentum to continue in the second half. So I think we are, at a board level, management level, quite happy with the set of numbers that we have delivered.
Let me focus a bit on biosimilars and, of course, Biocon Biologics as part of it. 60% plus of the revenue contribution coming in from there, your largest growing, or I think fastest growing space as well. Do you expect the revenue contribution to grow going forward?
I think overall, as a percentage, we have seen, as you mentioned, 60% revenues come in from biosimilars, and I think the overall revenue growth of 25%. We expect the growth momentum to continue in the second half and the coming years. And there have been many, many new launches. We have had 4 new launches in the US itself this year. We have several new launches coming up in various markets, including Europe and rest of the world. And I think also our base portfolio, or the base products which were launched earlier, also continue to see more demand, including insulin. I think insulin, there is a huge tailwind as we see more and more innovators focus on GLPs, and that opens up for us to play in that space. And I think in the coming quarters and years, we are very well placed to benefit from this opportunity in the biosimilar space.
Can you give us details of the 4 biosimilars that have been launched?
So we had biosimilar bevacizumab in our oncology portfolio launched in the US. We also launched biosimilar Aspart as an interchangeable insulin in the US. We launched biosimilar ustekinumab, and we had biosimilar aflibercept launched in Canada. I think these 4 products did contribute to the growth we have seen in our North America region.
You also launched denosumab, I hope I'm saying it correctly, which treats osteoporosis and cancer-related ailments as well. What is the kind of scope that you see from this particular launch and the revenue contribution?
See, it's very early days to comment. We do have a settlement with the innovator which will allow us to bring this drug to the US next year. So I think, of course, we have launched in other markets. So for me to give a guidance at this stage will be a little difficult, as the market will ramp up over a period of time. As we know, biosimilars, unlike generics, does take some time to ramp up. Of course, it depends on also number of other biosimilar players when we launch the product. But we are quite confident, as we've seen, again, a very strong oncology and a very strong diabetes through insulin franchise in the US, that we will leverage that benefit, or the whole infrastructure that we have set up to benefit from the future launches.
Okay. The settlement with the innovator, you see it coming in time for the launch that you're planning next year, or do you have some timeline in mind for it?
I think the terms are confidential, but yes, we do have a timeline, and we will be there in the market, at that time.
Okay. Just let me talk a bit about the biologics part of the business. What are the margins for this portion of the business that we've seen, and the growth there for the quarter year on year?
See, our core margins, which is excluding R&D, was at 32%, and the Ebitda margin was a very solid 25%. And there was a peak of 4% compared to last year in the Ebitda margin. I think, of course, the revenue growth and all the focus that we have had in optimizing our operating costs, because a lot of the costs are fixed costs and they've already been invested. So as we see more and more revenue growth, gross margin growth, that will contribute to increase in the margin percentage. And that's why we've, compared to last year, we have seen 400 basis
It's,
point increase in EBITDA.
and do you see that as sustainable or growing? Are you seeing 25% as the sort of margin for this part of the business, which is a bulk of the overall?
No, I think logically, again, that as the revenues continue to grow in the coming years and the fixed cost does not change significantly, we will continue to see expansion in the EBITDA margin. But of course, the existing business also has price erosion which continues. So there will be a net impact on the margins, but it will be in the positive direction.
That was exactly my question. As you know, have this pricing pressure, especially in the US. How are you defending those margins?
I think in biosimilars, the business tends to be more sticky compared to generics. I think in generics, the price war or the competition is more intense, unlike biosimilars. So the patients and the payers and the PBMs of course, look at continuity of supply, reliability of supply, unlike just generics, where price plays a much more dominant role. So I think that's the reason when you look at products such as biosimilar trastuzumab or biosimilar pegfilgrastim, despite 5-6 players for these products, we continue to hold over 25% market share very steadily. And same is the case in Europe. I mean, if for the products that have been launched over the years, we have seen a very steady market share despite new players coming in for the same products.
What is the US contribution right now to the biosimilars business, the US exposure?
It's roughly 40% plus.
Okay. So recently there is a fast tracking for biosimilars that the US FDA has announced. How is that going to help you? What is going to be the impact for you?
See, what this it's not really fast tracking. It allows companies who have a very robust preclinical data and phase 1 data and who can submit a very robust scientific file to get a waiver on a phase 3 trial. Now, that would help companies to reduce the cost of development, because significant cost goes in phase 3 trials, and also it will shave off a couple of years to conduct those trials. And I think we are very well placed. We have a portfolio of 9 to 10 products that we've been able to bring to this market, and we do understand what the regulators are looking at. Our scientific capabilities that we have built over the last couple of decades definitely places us very well to benefit from reduced costs and reduced timelines.